Hey there, Mark Lewis here from Mark's Money Secrets. Today we're going to talk about, perhaps in my mind, the most important aspect of having a company, having a corporate structure at all, and that is compliance. You know, we've had hundreds of people and companies go through our structure programs, the mastermind, the one-on-ones, even the courses, and you know, we've never once seen anybody who's had their corporate structure or even a single company fully compliant. And that includes CPAs that have gone through and accountants and all kinds of other things. One of the powerful things about companies is that they invoke all of the capabilities of asset protection and legacy preservation when you're multi-member. Also a great deal of tax benefits too. But if you're not compliant, all of the assets, all of the tax breaks, all of the legacy that you want to leave to your family and friends after you pass, all of it can be stripped away in a moment. And sometimes from the most insignificant of things. There's 10 specific compliance items with which we always want to comply. They're general, and this would be the same for whether you have a sole proprietor LLC, multi-member corporation, partnership, LLC, whatever that is. These tend to be the things which, when you get them right, it becomes very, very difficult for anyone to tear your corporate veil asunder. Let me tell you what I'm talking about. Now, there are 10 ways to kill a corporation. We call them corpses because really they're just dead entities, and the only thing that's in them that does anything are actually the living people. And those corpses, those corporations, in order to invoke the powerful asset protection that they have, the estate planning and the legacy preservation, not to mention the tax benefits, you have to stay compliant. And if you follow these 10 things, it's extremely unlikely that you're going to not be compliant and have the issues that so many other people have when there's somebody trying to break open your corporate veil. That is the kind of fictitious barrier and border between the mean and nasty outside world and your company. Number one, a single member corporation. If you have a sole proprietor LLC or a single person S Corp or C Corp, you don't have any asset protection or legacy preservation because you're really just fooling around with your own stuff. You're an alter ego of you just trying to look cool and have pseudoscience applied to your asset protection. Because in a court, they're just going to include all of the assets that are in your company as yours because you're acting like yourself. In fact, the IRS calls a sole proprietor LLC a disregarded entity, and you file all of the taxes for that entity on your own 1040, so it can't really be separate from you. Don't make the mistake of expecting or certainly be surprised that you don't have asset protection in your sole proprietorship in a lawsuit. Then, commingling. We don't want to take your personal assets and commingle them, combine them with corporate assets, and that includes bank accounts and money. Don't play fast and loose, moving your money in and out, and no big deal, nobody cares, credit cards. That's going to be cause for all kinds of scrutiny and problems in the future. Keep your corporate and your personal items separate. If you need to combine them, do it on a contract, put it in the minutes. Number 3, fraudulent conveyance. If you don't own something, you can't move it into your company. And what things would you not own? Well, anything with a lien, anything with a loan. You can't move that. You don't own it. If you try to put it into an LLC, that's, again, fraudulent conveyance. People go to jail for that. Best case scenario, you're stealing. And this also includes the assets that you own in your marriage. Without some kind of a marital bifurcation agreement where both you and your spouse agree to separate assets temporarily so that you can both put them into a company, then there's a possibility that under scrutiny, your entire corporate structure could be considered what we call ultra vires, void on its face, because its initial contributions were made via theft. And then naturally, please pay your fees that the state issues to you every year for you to keep up to date and file all the appropriate paperwork. Please have an annual meeting if you're a multi-member company. If you don't, then that, again, you're not in compliance. And that's just a simple meeting where everybody gets together. It could be even on Zoom. And then you just say, here's what happened, here's what we're planning, let's vote, let's do this. And that's all described and ascribed into the minutes, which is a dumb name for the secretary of the company writing down everything that happened, everything that was voted on, everything that perhaps was even voted down, and that's stored in your corporate kit. That's very, very important that you have those available, and you do that once a year or more. In the minutes themselves are 3 rules, and we have to abide by these 3 rules and a sort of pseudo fourth. Otherwise, what we're trying to vote on may violate other laws. I had a friend who came to me when we were first learning this back in 2007. He goes, "Hey, Mark, look, I figured out how to get my company to pay my mortgage." I'm like, that's kind of not How? And he says, oh, the mortgage company don't care where the money's coming from. And I'm like, okay, but what's the benefit to the company for paying your mortgage? If it's just a tax deduction, that's not an actual legitimate business expense. And obviously you're getting all the value. It sure looks a lot more like you're just commingling funds, number two, than actually doing something of a business nature. Well, what are the rules of the minutes that had me realize that? Rules of the minutes are, what is it? What's happening? Why is it? We don't have that in a contract, but in minutes we should. And then the third one is, what's the benefit to all parties? And if only one party is getting benefit, that's not a good minute. We shouldn't do that. And then the pseudo fourth one I call the corner drugstore rule. And that is, if you wouldn't do it to the corner drugstore and the corner drugstore wouldn't do it to you, you sure can't do it to the company in which you're supposed to have an arm's length relationship. So would the corner drugstore pay your mortgage? No. And so neither should your company pay yours. There's a thing in your corporate binder called the transfer ledger, and it has to be accurate and up to date. And most people don't realize that the location of the share certificates in that transfer ledger is not where the people live who own and hold the transfer ledger. It's the transfer ledger's location itself. So if you give me a certificate and I put it in a safety deposit box at the bank, my address doesn't go there. The bank's does. And naturally, if you get a letter from the IRS or some other government agency or even a creditor, you want to respond very, very quickly, but without disclosing the confidential corporate proprietary information that is what keeps your corporate veil alive and going. The only way you would ever disclose and squeal on your company is if there was an appropriate jurisdiction warrant to the company itself, which in some cases would be in the state of Wyoming, which, by the way, is a non-charging state. So good luck with that if somebody's trying to crack your company over and you've honored the CPCI for your company. Again, respond to the IRS. Even if it's just, I don't know how to respond, but I'm letting you know we're going to respond within 90 days. Expect our letter to you on this subject on September 3rd. So if you follow these 10 things, will it keep you from being in a lawsuit? No, not necessarily, no, because anybody can sue you for anything. But as you well know, the corporate veil, that's what's keeping you strong and able to defend yourself powerfully as a corporation and keep your personal assets away from any lawsuits that come to your company. And when we keep these 10 rules, the rules of compliance, up and running, it also keeps the legacy preservation side of our companies going and allows our maximum benefit from a tax side as well. Now, if you want to learn more about this, we have a mastermind where we walk people through the entire incorporation process over the course of 10 weeks. We also have courses aplenty. The link is here in the description. And of course, you can reach out and talk to us directly live on any of our Instagram lives that we have. I hope to see you there and connect with what you're up to. And if not, be wealthy.